housing market could see a pretty substantial slowing. Zelman and Associates CEO. Ivy Zelman, we've talked about her a bunch. She's one of the most prominent real estate economists that there is in the game. She was the one real estate economist, focused economist, that in the 2006, 2007 years was predicting the collapse, where everybody else in the obviously you had the guy from The Big Short who bet against the housing market,
Of
but she
course.
was the one real estate focused person that was saying, hey, here's what's coming. And now she says, we're building too many homes right now. So, like you and I have both said, 2022, you're going to continue to see prices go up. Although right now it looks like, and January was an indicator to that we'll sell less homes. We'll sell a little bit less homes in 2022 in comparison to 2021. Obviously, there's even less inventory right now as we sit here in quarter one. So that has something to do with it. But we've been pretty, when we talk about the market, we've been pretty much focused on the next 12 months, 2022. I still believe prices are going to go up. Ivy Zelman is not contradicting that. But what she's saying is in 12 to 18 months, we could have way more inventory than we think is possible. There's so many reports that say we're 3.8 to 6 million homes short to meet buyer demand when you count how many homes were not built after, the mortgage crisis. She's saying she's not buying that data. Not that the way they're counting isn't accurate, but she's saying we're not short that many homes for these reasons. You've got household money, meaning people's wealth, household, and population increasing. It is increasing, but it's going the wrong direction, not increasing substantially enough for this shortage to kind of exist. She also said an interesting stat: 20 to 39-year-olds living at mom and dad's house was 16% during 2010. And no, I'm sorry. It went from 16% during the mortgage crisis up to 19.7% in 2010, which makes sense, right? Like after the housing collapse, more people would move back home. That would make sense.
Yep.
What about the next decade, Nicole? Where do you think it went from 2010 to 2020? They were at 19.
Are you in the article? Are we in the
Well,
article?
we're gonna link up the Yahoo Finance article, but there was also a video that she did where she kind of expanded on this article. Both of these were within the last week.
Yeah.
And the video, you can find that. It's Arch MI. It's some kind of mortgage company that did this video. Zelman the Contrarian, We're Building Too Many Homes is the title of that. You can
that Vimeo link you sent me?
The Vimeo link. Yeah, they put it on Vimeo. I don't know why they didn't put it on YouTube. Seems a little odd, but people still use Vimeo, I guess. So, all right, if 19.7% of 20 to 39-year-olds were living at home in 2010, do you think the number was higher or lower in 2020?
In 2020, I think it was higher.
It was 23.7%.
Well, 2020, I mean, that was the middle of the pandemic.
Yeah.
Everyone flocked home.
It seems like, to what she's saying, that number is gradually continuing to go up, and that culturally we're fine with multi-generational households. She mentioned that Caucasians will be the minority in the near future, and that she said Asians and Hispanics are probably more normally live with multi-generation. That was her words, not mine, her data. She's also saying that, people just, the stigma of living in your parents' basement isn't there like it used to be, right?
Well, you're making it a stigma. Yeah.
I think it is a stigma. I mean, come on.
The dudes living in their mom's basement.
The dudes love living in their mom's basement. They probably make up the far majority of that 23.7%. She did actually mention what we talked about last week, where young women are going out for higher education at an accelerated rate. And that maybe some of those, even though we saw a study that say they want to buy a house, but maybe some of those are
slowing down.
Yeah, till they can pay off that.
Yep.
Anyways, when you look at that young group, 20 to 39-year-olds, at the end of the day, what we're not doing is building the right product for affordability. So when Ivy Zelman says we're building too many homes, there's going to be this pent up demand. Nicole, in the Northeast, we don't see building too many homes.
No, we don't
It,
see much new construction.
we don't see much new construction in the Northeast at all. In the comments, if you're seeing a lot of new construction wherever you are, where are you and how much are you seeing? She's saying that it will be localized. So Texas, for example, has 14% new households being created in that state. Obviously, people are going there. It's an obvious trend, but that builders are building over 30% of a faster rate than before. So if everybody's on the same path, meaning all the builders are like, oh man, everybody's coming down here,
Build,
I'm going
build,
to start
build.
building more. Everyone has the same game plan to build, build,
Right.
build, and you're outbuilding the pace of people coming in. That could, when all this inventory hits in 23, create an oversupply of homes. Real problem that she kind of touched on, and I just wish it was only a 20-minute video in the Yahoo Finance article. I think you can pay for her studies. They're like thousands of
Mhm.
dollars. Maybe she goes deeper in her studies. But I think the bigger problem is when you build a house, nobody's building $200,000 single family homes.
Right.
Nobody's building.
I don't even think you can.
Yeah, you can't.
No, you
The
can't.
cost of land, the cost of materials, you literally can't build a $200,000, a $300,000 home. I mean, the median price point right now in America is like $400,000. But yet when I go and I drive by new developments in, say, South Florida, I'm seeing prices starting at $599, at $699 in all of these communities. So if we're going to be building 1.5 million homes, which is a number I've seen out there, that are going to be hitting the market in 2023 in 12 to 18 months, and if they're all between $500,000 and $800,000 starting prices, that is a problem because the majority of the people that want to buy homes right now are not in that price range. I don't see
You
where
believe that? You believe that?
that the majority of the people that want to buy homes are not in that price range. Yeah.
Yeah.
I mean,
Okay.
if people from 20 to 39 want to move out of their parents' home,
Yep.
they're likely not in that price range yet.
Okay. Well,
I mean,
no, but there are people though that are coming out of that price range. There's I mean, a tremendous amount of move up buyers. I mean,
but if they're all being built, and to her point, in these certain areas, Arizona, she mentioned Texas. She didn't mention Florida. I'm just bringing Florida up. It wasn't one of the states she mentioned in the video, but she did mention the Carolinas. She did mention Georgia. She mentioned some of the mountain states that, Colorado, that people are flocking to,
mhm.
where she said, contrary to that, and I would put the Northeast included in this. Ohio does not have a situation. She lives, I think, in Ohio. Ohio, Pennsylvania does not have a situation where they're overbuilding right now. So it might hit certain areas. And we saw this during the last real estate crash. I'm not predicting a crash in 23. I'm just saying what Ivy Zelman sees coming here. We saw this when the market crashed. What happened? Vegas, Florida,
Florida, yeah.
Arizona, these states got hit hard in the beginning, the hardest. Some of the lagging state, like the Northeast, was lagging behind it. We went for like another year before really crashing. But because they overbuilt during that time period too, they had too much supply. Now, listen, all these areas that we're talking about right now are under 2 months of inventory currently. Back then, they were over 10 months of inventory. She didn't touch on that at all. But she does say that we're building too many homes and that it's going to catch up because you will have at that in 2023. We know we're going to be in a 4% interest rate. We know that there are more homes coming on the market in some areas, new construction, and that investors, they're buying up 26% of homes right now. Investors are buying 26% of the single family homes. If it looks like the market is going to drop significantly, I think the majority of these investors have said that they want to hold these and rent these. But
Right.
what if, and this is what she said, what if, Nicole, some of these investors decide to take some money off the table? Wall Street is going to control the market in a lot of different ways that we don't fully understand. They control the stock market by algorithms. They buy up a stock and then everybody sells at once. And like Facebook just dropped 26% last week when all these algorithms and hedge funds sold. The same way, the same thing could happen with real estate. If all of those investors say, we're going to take 20% of our portfolio off the market and push inventory onto the market, that does drop prices on single family homes quickly. Whether that happens or not, whether they just hold them forever, I don't think they're going to hold everything forever. Would you agree with that?
I agree with that.
At some point, they're going to take some money off the table. No?
Yes. No, I agree. I mean, the reason that they're putting money into real estate is because of the stock market. So, I mean, naturally, the market's going to ebb and flow and they're going to pull it right out and probably put it right back in. You know what I started watching last night in the middle of the night? Have you seen Billions? Have you watched the
Yeah.
show
I mean, of course.
Billions?
It's the greatest show of all time. You're not watching the
Well,
new one, right? You're watching the
I
original,
I
like
am
season one?
watching the first
Yeah,
season
good.
from 2016. Clearly, I've been in a hole.
Oh my God.
Um,
It's the best show
I
ever.
feel like I'm learning so much.
It's incredible. I
It
mean, Bobby
really
Axelrod is the best character, up there with Ari Gold on Entourage and Logan Roy in Succession. I mean, he's
Oh,
right
I was
there.
gonna bring up Succession too, because it's kind of like the same, like so I started Succession. I think I got through the first season. I mean,
Well, now you
it's
went to
all
Billions. Now you're gonna have a compete. Like, which
I
one do I
ran
watch?
over. Well, so I'm having a hard time getting in. I started Ozark. I tried doing Yellowstone. Like it's all these like
You're trying a lot of different shows,
I
Nicole.
really am trying a lot of different shows. I'm trying to,
So what
feel
was the
my way
Billions
through all of
reference
it.
here?
No, no, no. I'm just, it's again, well, because again, it just sparked it because it's about money and investing and pulling and dropping things and short sailing. And it's just, it's all
And
that.
and you see, in like for those of the listeners that have seen Billions, you see how these hedge funds can really manipulate markets.
Oh, for sure.
And
And the,
and
and the government and people's lives. I mean,
right.
it's, yes.
And this is all kind of, and that was based off of, is based off of a real hedge fund manager, obviously loosely based. They have all these crazy storylines and all this kind of stuff. Same thing can happen in real estate where if these investors see it coming, okay, interest rates get to 4. When rates went to 5% in 2018, the market stopped on a dime
Yes.
because there was so many people that were locked into 3.75 and 4 interest rates at the time.
It
They
was
said,
too expensive for them to move.
they're like, why would I
It,
move? I got this
it's,
great
yeah,
interest rate. I'll just make this
yeah,
house work.
right.
You could see the same thing happen by the end of 2023. If we get to 4.5, 5 again, it's even more of a gap because people are locked into 2.75 right now.
Right. Yep.
They're locked into 3. Why would they ever want to sell out of that mortgage
Right.
rate?
Yep.
You wouldn't want to give that up.
Never.
And Ivy Zelman says, theoretically, we start to see a 30-year fixed rate as high as 4, which we've seen touch already this year. We have about 70% of homeowners locked in below 4. So if you're locked in at 3, rates are now 4. It's that big disincentive. But if it gets to 5, boy, that is that screeching halt. A lot of people can't afford homes. A lot of this new inventory that Ivy Zelman's referencing in 2023 is going to be much higher priced than, that's why resale homes, have exploded in price appreciation because they're still selling cheaper than new construction, and it's still cheaper to buy those homes than, the similar like property on the rental market. We went through that
Mhm.
whole
Yep, a few weeks ago.
data off of Redfin. We'll link up the Yahoo article. There's a lot of interesting takes there. If you Google the Vimeo video that she just did, it's Zelman the Contrarian. We are building too many homes. It's interesting. I want to be clear. 2022 home values are not going to sink. But when you have an increase of inventory in 2023, when you have an increase in interest rates in 2023, and you have a venture investors potentially taking money off the table, that's when you see a market cool. It means there's going to be opportunities for people in 2023. So get your cash up and get ready, because 2023 could bring some real opportunity in the real estate market, and prices will probably go down. Hey guys, if you enjoyed this short clip from the Real World, click here for another one.
Or if you like the full episode, click here.